We have with us Aditi Nair, Chief Economist at ICRA, joining us. Aditi, you heard the governor again after the RBI policy yesterday. Any additional takeaways, especially on the liquidity front? The market seemed to have been worried that, not enough additional measures were announced over and above that 1.5 lakh crore that was announced for durable liquidity.
So, on the liquidity front, certainly there could be some tightness that comes around in March at the time of the advance tax collections, because that, coupled with the seasonal increase in the currency in circulation, there is a valid concern that liquidity might tighten again in the month of March. But that tends to be quite frictional in nature. So it's not a durable, tightness in liquidity. And therefore, the RBI would always be able to announce, more a shorter duration VRR to be able to get us through to April, when the liquidity situation typically reverses. And therefore, it's not appropriate to take a CRR cut to be able to deal with a year-end tightness in liquidity. And that kind of a liquidity measure can be announced in March itself. It doesn't have to be announced ahead of time.
Well, yes, the governor also said that every 5% depreciation in rupee, they're mindful of the fact that it can lead to a 30 to 35 basis point rise in inflation. Now, keeping this statement in mind, and of course what we heard yesterday, no cues really, because the stance wasn't changed from neutral. What is your expectation as far as the next rate cut is concerned, and the whole rate cutting cycle? How steep or how shallow could it be?
So I think it's actually to maintain the stance as neutral, so that we are not sort of priming the market for what the next policy action may be. That gives a lot of flexibility to the RBI in very uncertain times, especially related to the rupee and what's happening globally. And it doesn't kind of bind them or tie them into what the next action is likely to be. So I think retaining the neutral stance was very, very prudent at this point in time. And that is what we had anticipated that they would do as well. Now, for the CPI, the transmission of rupee depreciation to the CPI typically tends to be a lot more lagged than it is to the WPI, because the composition of the two is very, very different. And the kind of items which are in the CPI, fewer of them will react to a rupee depreciation, because many of them are domestic in nature. Things like food and many services which are non-tradable, there will not be an immediate impact. And for the other items also, it will be a little bit more lag than what you would see for globally traded commodities that make up the WPI. So point is that, yes, 5% depreciation leading to a 30-35 basis points increase in the CPI, it will happen over a period of time. It's not going to happen very quickly. Now, our sense is that within the growth inflation outlook that we are seeing for FY26, amid admittedly high uncertainty both on the growth side and on the inflation side through the dual impact of tariffs and the impact on depreciation, we think this rate cut cycle will be shallow. And we think that another 25 basis points is what we can reasonably expect at this point in time from the MPC. Now, will it come in April, or will it get a little more delayed beyond that? Definitely all the information that we have over the next 2 months, both in terms of our domestic growth and inflation numbers, as well as the policy changes that happen globally, that will have a big bearing on what the MPC decides to do in April.
Okay, Aditi, while largely the market was expecting this 25 basis point rate cut, a very small section was worried about the fact that because of this rupee depreciation, if we choose to cut rates now, the differential between Indian and US yields, how that would widen and therefore lead to further pressure on the rupee. Today we had the governor say that, the assumption of the MPC factoring in the policy was rupee at 87. What did you make of the comment? Does this indicate anything further as to how this will influence future decisions as well, assuming rupee at 87?
See, I think as far as the rupee is concerned, we're in for a bit of a volatile phase, as is the case with all emerging market currencies. So it's really hard to say today what the decision will be in April, because the situation could change between now and then. We did see last week there was some pullback in the currency as well, but then as soon as again, globally uncertainty increased, again we saw that the INR depreciated. And unfortunately, I mean, we may be in for a period like this over the next few months. And that's why having a neutral stance has been so appropriate at this point in time, so that the MPC can choose to take the best decision based on the data that they have in front of them in April.
Aditi, with every new RBI governor, we do see some shift in, the sort of strategic, the policies, the thinking, the direction of the regulatory environment. Now, here, yesterday, you heard the governor speak today again when he was asked about his views on crypto. He made it very clear that, they're going to wait for the working group's report, not really going out and, spelling out the concerns that RBI has been spelling out over the past few years. Every time the word crypto is mentioned, do you expect some softening of a stance there as well? What was your reading of his comments?
No, I think it's too early to make a comment on that.
Okay, because we did see some easing as far as the liquidity measures are concerned, but that, of course, was largely on expected lines. But thank you, Aditi, for helping us go through some of the additional comments that have come in from the Reserve Bank of India governor after his meeting today. Thanks very much. On that note, we're going to slip into a short break, but don't go anywhere. We're back in just a moment.